Do you need good credit for a business loan? We're going to answer that question in this video. Okay, so to answer the question of whether or not you need good credit for a business loan, well, it actually depends on who you're getting the loan from. Are you getting it from a good friend, maybe mom and dad, or are you getting the loan from a bank or from a credit card company? So obviously, if you're getting it from friends or family, the only credit that's going to matter is the reputation and the relationship you have with them. Maybe your parents just love you so much they don't care whether or not they believe that you're going to pay them back or not. They're your parents. They just want to help you out. So that's easy street compared to the other. Maybe you have a friend that's very close to you, been your best friend since you were 5 years old and would do anything for you. And this is their way of showing you that. They just want to help you out. They know you might not have the best credit, but they just want to help you out pursue your dream. And then there's all the people that you don't know. The men behind the curtain, the women behind the curtain, the people that you've never met. It's like the Wizard of Oz, right? You don't know who these people are. They're pulling the strings in the back, but they're willing to lend you money if you've got good credit. And if you think about it from their perspective, why would they want to loan money to people that have terrible credit? Let's talk about what credit is and why you would have good or bad credit for a second before we go back to that. Well, you get good credit by somebody initially loaning you money and you making good on it. So usually the way that happens is you turn 18 years old, you go and you find out which credit cards are out there loaning, like student credit cards and things like that. And they always start you out small, $300 or $500 or $1,000. And then they just see how you're going to behave. And that's what determines how you're going to start building your credit. If you're paying your payments on time, if you're paying your balances in full every month, these are the things that are going to determine whether or not you make good credit, and vice versa if you make bad credit. So once you've had a credit card for a while, then you might be able to qualify to get like a car loan or something like that. And as you start borrowing money on different things and you start making your payments on time, you start developing good credit. So if you're going to start a business and you've got good credit, you've shown through your history up until this point, you've shown in the financial world that you're a man or woman of your word. That when you borrow money, you pay it back. And that's what they want. So what banks do is they're smart. When you go to get like a business loan or a car loan, a lot of times you've seen those car commercials and they'll say something like 0.9% interest for qualified buyers. What do you think they mean by qualified buyers? They're referring to the people that actually have great credit. Those are the people that get 0.9. If you've got medium credit, heck, you might be 2.9%. If you've got terrible credit, they might not even let you get the loan, or they might charge even more interest, right? So the interest is correlated to your level of credit. And this is why I try to drill it into all my students' heads. I say, look, if there's one thing that you never want to screw up, if there's one thing that you want to be perfect on, it's your credit. Don't damage your credit. And there's situations that occur sometimes that you're 100% right, but you also know that if you don't make good on it or don't do what they say you're going to do, they might hurt your credit. The last thing you want to do is get to a point where you finally made it, you've saved up a lot of money, you're ready to buy your dream home, you've started a family, and the bank won't loan you the money because you got a ding or two on your credit report, right? And that might be something where you are completely right. But the credit report doesn't dictate the whole story. It doesn't say, well, the reason this happened was because of this, or the reason this happened was because of this. Like, let's say you lease an apartment, and usually they'll give you, a month free, and you sign like a 12 or 13 month lease. And then sometimes you'll have to put down a deposit, sometimes not. But at the end of that lease term, you decide you're going to move out of that apartment and go somewhere else. Well, here's something you've got to keep in mind. At the end of that, they're going to do an inspection of your space. They're going to make sure you didn't trash the place. I mean, you could have. And if you did, they're going to make you pay for it. They're going to make you pay to repair it. And if you don't pay, they're going to dock your credit. They're going to send that to credit reporting agencies. And that's actually going to hurt you so much more down the line than if you'd have just spent the couple $100 or the $500 that they wanted to repair the hole in the wall or the burn on the countertop or whatever the heck that they're charging you for. It's not worth the hassle to fight. Now, you can obviously go to the apartment complex office building, right? And speak with the manager, whoever's in charge, explain the story and try to amicably resolve it. You can try to explain to them, hey, this was here when I when I leased it, I just didn't say anything. Whatever the case may be, tell them the truth. But in the end, you're going to need to honor what happened. Okay, you're going to need to honor whatever things they're doing because they're going to hurt your credit score. Don't miss payments. If you have a car payment, you lose your job, and let's say you got this car and you decided you're going to make payments for 36 months, let's say, and you're halfway in, so you got 18 months of payments, and now you're jobless, and now you're job hunting. Okay, in the meantime, the bank doesn't care. You still have to make that payment. Truth be told, don't try to get the bank to be emotionally involved. There's no emotion in this. It's just business. That's the most common saying you will hear over and over and over and over. It's just business. And here's basically what that means. Boo-hoo, tough. We don't care what happened in your life. When you sign this agreement, this document on day one for 36 months of payments, you didn't put in there was no stipulations of if you lose the job, then what? If you go broke, then what? If you don't have any money, then what? They don't care. It's simple. They'll just repossess your car, take it back, and sell it to somebody else who's got the money and can make the payments. So knowing that that's how it is, it's usually that black and white, you need to prepare. And that's another reason why you want to save. Always save as much as you can. So when you run into bad times, or as we like to call it, winter season, then you've got enough to kind of get you through those tough times. You've got to have that bridge to gap that really tough time. You'll get there. As long as you're willing to do the work, as long as you're willing to pursue another job, another career, whatever, you'll get there. But you just have to make sure that you're the one that's willing to push through no matter what and make those payments. Then, as time goes, as the years peel off, the credit reporting agencies, length of credit history, that's a big part of your credit score. So as the years go, not only are you showing all the history of, hey, look, I borrowed money for this and I paid it off. I borrowed money from Nebraska Furniture Mart to buy some couches for my house. I paid it off. And all this stuff, when you register for credit, is going to ask you for your social security number because that's how they track you. That's how they know who you are, who the person is that's going to be making the payments. And then if you build up that good credit, here's the beauty. Then when you finally go to get your business loan or your home loan or whatever, you're going to most likely get approved. But even better, you're going to get approved at a much better interest rate, lower interest rate, because you're one of the people that are considered low risk, meaning you've proven yourself. You've proven that you're going to be that person that's going to sign up for something, honor your commitments, and pay us the money that you agree to pay us. That's all a financial institution cares about. That's all they care about when they loan you money is, are you going to make that payment on time? Are we going to make our money back and get our interest? That's all they care about. So, do you need credit for a business loan? If you want to get one that's not through your friends and family, you probably need good credit to qualify for it. But in some cases, there are companies out there that will loan people with bad credit money for whatever purposes, but it's going to be at a much higher interest rate. So make sure that you do your best in your entire life from the time you start doing borrowing money. Make sure to build good credit. And if you've already got bad credit, start from today to do everything you can in your power to start changing that. And slowly, as the months and years peel off, your credit will start slowly improving and you'll get to a spot where you've got great credit. So I hope you've all found this video very helpful. Remember to keep pushing hard, keep driving, and be the hustler.